Welcome back, everybody. Happy Monday. We are here with Stephen Gu. I am Casey Stiers, one of your hosts, and I'm here with my co host, Halle McCrory. I am known as the Downtown Guru out of Raleigh, and I do all of North Carolina as far as real estate goes, from coast to mountains. And Halle handles Texas for us. She's San Angelo and Dallas.
Yep.
And then we have Stephen Gu here that is going to help us with tips, tricks, and hacks when it comes to taxes.
Yes. Thank you, Stephen, for coming on. We're so excited. So you guys, I connected with Stephen in a podcast Facebook group. So if you guys, if you have a podcast or want to be in a podcast, make sure you utilize Facebook groups for this. You never know who you're going to get connected with. And now we're on LinkedIn and stuff. But yeah, Stephen is a tax expert out of Atlanta, Georgia, but can help people anywhere. And he specializes helping entrepreneurs, and he's helped tons of realtors. So he wanted to come on today and, talk about best tips and tricks around your, filing for your taxes, things you can do to help yourself. So welcome, Stephen. We're so excited. I know this is going to be this has been a highly anticipated podcast, as this is something that all realtors definitely struggle with. So thank you for making time for us.
Thank you for having me.
Awesome. Well, give us a little bit of background about you. How did you get into the tax world? What made you focus on entrepreneurs? We'd love to hear more about that.
Sure, Halle. I think how we connected, we are exactly met in the Facebook group. We have a podcast, and when I see your name, West Texas, that's what rings my bell because, I immigrated to America 20 years ago.
Wow.
With $3,000 and $2,000 from my cousin. And the school I went to actually in West Texas. That's how it's Texas, part of Texas A&M University. So when I see you, I'm like, and we need to get it connected.
Yeah, giggle.
Yeah. So tax. No, I'm a personal CPA and a tax attorney. So if you think about from it's a combination of a legal field with accounting field as a natural sort of in between. That's the tax, right?
Mm-hmm.
Tax is quite kind of boring, but it's unfortunately it is very important topic. Right? If you think about how much tax we are paying, majority of a small business, we are, average American probably we are paying 25 to 30% taxes. That is income tax. Now, for ladies, for you guys, if you're self-employed, you have to pay so-called self-employment taxes. That is additional 15.3%, right? And then in addition, you have to pay sales use tax. You have to pay, property tax, right? And when people die, you probably used to have to pay estate tax. So if you add that, that's lots of taxes you have to pay, right? So yeah,
I don't like to think about
it. So let's say no, average American. Let's use 30% as an average tax rate, right? So if you think about it, so if it's you have to pay, that means every day if you work for 8 hours, that is around 2 hours or 2.5 hours you are working for IRS, right? If you work for 20 days a year, 20 days a month, that's like 6 days, almost like a week, you are working exclusively for IRS, right? Now, average American, let's say our working years, probably 20 years or 30 years. That means you have probably 10 to 12 years of your working life. You are really, the money you make is paying for IRS. Right? I think it's almost like a life prison.
So yes.
Yeah, so I always try to remind my customers, like, taxes is really the number one biggest expense for your business. It's the number one profit killer. And don't look at your, P&L just based on how much revenue you have, how much net income you have. You have to look at how much net cash you have after tax. That's what matters. So
that I was trying to hide my. I'm just kidding. Yeah, obviously that is just an insane, I guess, statistic. Like 10 to 12 years of your life working for the IRS. I'm like,
I know that just makes you depressed.
Yeah.
Lifetime prison.
Well, at least we have people like you to, help us combat that somewhat.
Hopefully
Okay.
we can buy some time back.
Okay. And I apologize too. I didn't realize you were an attorney as well. I know that there's years of schooling. So I'd like to point out that you are also an attorney, which is amazing.
Yes.
So.
Yes.
Well, that means I have too much time in school. I should have just started with investing in real estate.
Yes, exactly. Okay, so Stephen, we'd love to hear some tips that you have for real estate agents, or even if you have any tips for real estate investors as well. We'd love to hear them.
Right. Well, I can talk for days for those. So it will be very, very big topic, right? Maybe let's focus
Yes.
a little and touch a little bit on both sides.
Okay.
Why the real estate professionals needed to understand a little bit about taxes,
Okay.
and especially for realtors. And then we can touch a little bit about real estate investor, because for investors that's sort of different work, right?
Right.
So for realtors, I teach a class here in the realtor school here.
Okay.
So generally, I can divide those into three topics. First one, we have the realtor, and how we can help realtors to get more sales, right? Because you have to have closings. Without closing, there's no profit, right? So that's one topic. Some little tips, tax tips, can help realtors to close more deals, right? And then we can talk a little bit how a few tips that can save a little bit of money for the realtors. What kind of tips that can save you? Does that sound good? Like mainly focus on those two areas.
Yes.
Mm-hmm.
Okay. Yeah. So for real estate, there's a few. You probably already heard about this. There's some tips realtor can use to help you close the deal. For example, home sale exclusion. Right? There's capital gain. If you live in your house for 2 out of 5 years, when you sell, you can get an exclusion, very nice exclusion. So I had a gentleman who owns 2 houses here in Atlanta. So one lake house and another one is main residence. He sold the main residence. We got him some home sale exclusion, $500,000 exclusion, and he also wanted to move to Florida. So he lived in the lake house for I think for half a year. He said he wanted to move. He decided to sell the lake house. I'm like, no, big no. Right? You already get the exclusion, so the lake house actually values more now. So I told him, hey, do not sell the lake house. I also told his listing agents, like, do not sell that. Don't do that. Let's go there, buy the house in Florida first, right? Most likely, as much as you like moving to Florida, most likely you will still come back, visit your friends, or you can still live in the lake house. So I told him, buy the Florida house first, and he did. So he still come back, during summertime when it's getting too hot in Florida. He still come back living in the lake house here in Atlanta, So he was after 3 years still able to meet the 2-year out of 5-year exclusion, right? So after 3-4 years, he was able to sell that lake house for much bigger. The value is much more, and he was able to exclude another $500,000 exclusion, right?
Right.
So that means, like, if the realtor understands this kind of tip, you can advise, not necessarily mean tax advice. At least you can tell him that maybe there are certain exclusion available. You don't have to sell your house now, right? So I think that just a little bit of planning can help your client, can help the realtors.
Yes.
Yeah.
Yeah, and we even, just as an example, kind of related to this, I have a client that they did a custom build home. They finished it November 2021, and things happened. They needed to move again. They thought this was going to be their forever home. They needed to move towns due to the husband's job changing. And we actually we had to time up their house to sell to where they met the 2-year mark, where they lived in it for 2 years. So we we could have done a 30-day closing, but we're doing more like a 55-day closing in order to meet that 2-year mark. So we kind of use that in our negotiating tactics and whatnot. But yeah, even stuff like that. You know, you can hire people as a realtor to help you with your taxes, but it is good to know these, you know, these kind of nuances and whatnot for your clients as well, even.
Exactly. Without that, they basically they lose, $250,000 you just lost if you without the planning. And also for those exclusions, you can even plan like it doesn't have to be exact 2 years. Like if you have certain reason, medical reasons for job, you can move a little earlier. It doesn't have to be 2 years.
Yes.
So there are certain exclusions. So
yes,
little tips like those, right?
Yep. Absolutely.
And also for like for if certain house there's some tax lien, right? That does not necessarily means you cannot sell the house. You know, if you work with certain professionals,
right?
Some of the tax lien can be removed fairly at a reasonable time, right? So it does not mean you don't want to look into, you don't want to deal with that kind of sellers. So even with the tax lien, talk to a few professionals. They may be able to help you to get the lien removed, and you can sell those properties.
Yes. Yeah. I had a question for you too. So this is kind of Texas specific, but I think other states, and I guess Casey, you'll be able to tell us maybe what the rules are for North Carolina. So Texas just recently came out with a new rule that's coming into effect January 2024. So here in 2 months. So what used to be the rule is that if you wanted to be paid out to an LLC, you had to be a licensed broker, not just a licensed sales agent. But now, starting January 2024, we can actually all licensed Texas real estate agents can now be paid out through an LLC. One, Casey, I want to ask, do you know if that's what case that is for North Carolina? And two, Stephen, I'd love for you to tell us the benefits of being paid out to an LLC versus an individual self-employed person, I guess. I don't know the technical term for that.
I am paid through my LLC.
Okay, so North Carolina, anybody can be paid through their LLC. Okay.
Yeah, I am paid through that. That's what EXP did because they somehow lost my license, my LLC number. However, and it was a big thing, so I had to switch it back over to personal and then switch it back. My CPA wanted to strangle me for that.
Yeah, I think it's better actually to be paid out of your LLC. It's better.
Yes.
Because for tax saving reasons, I think a majority of the state allow you to pay it out of an LLC. That's what you're supposed to do, because think about this is part of related to tax planning strategies, right? So once let's imagine all your commissions as a big pie. Let's say 100,000. Let's say you get $1 million, right? So if you do not pay yourself out of LLC, right? All the income depends which LLC you decide to how the LLC tax. The LLC could be taxed as a single member LLC or just basically on the Schedule C, right? Treated as a sole proprietorship, basically disregarded. Or it can be taxed as a S corporation, could it be taxed as a partnership, or even could it be taxed as C corporation. So it depends. It gives you lots of flexibility. Okay. You can make an election with IS. But the best is, I think, in general speaking, it's better for a realtor to tax register LLC, paid out of LLC, and then makes the election to treat as an S corporation. It's going to save lots of money on taxes. Here's the reason, right? Imagine all your commission will come as a pie, right? So if you don't make election, so all that big pie, where you are subject to self-employment taxes, 15.3%, right? That's in addition to the income tax you're going to pay, right?
Right.
15.3%, but the limitation is, I think, $147,000. The below 147, you have to pay 15.3%, and after $147,000, you have to pay 3.9%, right? That number, 147, that number is adjusted every year, right?
Okay.
So now, again, imagine let's say you make $150,000, right? That's 200. Assume you make $200,000. So without making an S corp election, all the $200,000 the first 145, you have to pay additional 15.3%.
Okay.
Right. And then for the remaining, you have to pay 3.9. Right. So basically, all the big pie are subject to self-employment taxes. Now, if you make an S corp election, right? Let's say now you cut your pie into half and half. For S corp election, you pay yourself a W-2, right? Now all of a sudden, only the W-2 portion, the W-2 portion is not. You have to pay the self-employment taxes, so-called payroll taxes. For the remaining half, it will be treated as dividend. It will be treated as distribution. That portion is not subject to self-employment taxes, right? So you basically you save money on the remaining half, self-employment taxes. So you can imagine, you can manipulate this, right?
Yeah.
You can say, hey, how about I just pay myself for $10 for the remaining? It will be exempted from self-employment tax, right? If you think you are smart enough, think again, right? Because IRS will know that. So once you make an S corp election, I said, okay, you have to pay yourself a reasonable salary. It has to be reasonable because you don't want it to manipulate the number, right?
Right.
Yeah.
So, but as long as you make S corp election, as long as you pay yourself a reasonable compensation as W-2, and you paid the self-employment tax on that W-2 for the remaining portion is not subject to self-employment tax anymore, right?
Okay.
So the planning trick will be, make S corp election, pay yourself a reasonable compensation for the remaining portion. You will save money on self-employment taxes.
Okay.
Yeah.
So you could really help decipher whether we should go LLC or S corp.
Well, those are two different concepts. LLC is a legal term. It's a limited liability corporations, right?
Mm-hmm.
But S corporation is a pure sort of tax. It's a corporation defined under the tax code. It's not a real corporation. It's called a subchapter S, right? They give you, basically the Congress give you more flexibility, right? So you get the legal protection as an LLC, right? But at the same time, you are taxed as an S corporation, give you lots of flexibility, and also help you save self-employment tax.
Okay. Yeah. Cool. Okay. So that's something that I need to get set up now. Well, and I am studying for my broker's license, but now it doesn't even matter because either way, I need to do that.
And I had all that set up before I went out on started CB Stars. That's what CB Stars Realty. That's what I'm paid through. That's what. Okay.
Yeah.
But now you're saying that, I don't think I'm LLC though. I am INC, the Inc. word at the end.
Interesting.
So you tax a C corporation?
Yes, I think so. I got the paperwork around here somewhere.
We don't know. We just listen to the CPAs.
Yeah, probably Inc. Sometimes I don't think the Inc. will make too much sense unless you are also investor, because the Inc. is subject to double taxation, right? So for the Inc. itself, you have to pay 21% taxes.
Okay.
Once you take the money out as dividend, you have to pay additional 20%. So you pay 41% taxes.
Yeah.
Okay. Yeah. So I got it around here somewhere. I don't know.
We'll keep it offline for sure. So what any other tips that you'd have for real estate agents? I know a lot of agents have run into that I've known, and me personally too. We as self-employed people, or people, I guess, it's sometimes hard. Like if we are going to buy a house personally, it's hard to get all those numbers together, and also hard, I guess if you don't plan with your CPA ahead of time, like with your goals for buying a property, you might not show enough income with your write-offs and stuff. Do you encourage your clients to, have that communication so when you're going to do taxes, like, hey, are you going to be buying a property in the future, or is it something that you always have them set up to where they can do that? Does that make sense what I'm asking?
Yes, but I will answer you at a more broader picture, right? So I think in order to save money on taxes for any business, not just real estate business, number one thing is you of course you want to make sure all your expenses have been written off, right? So how do you write off all those expenses? So goes to the basic. Really, you have to have a financial book, right?
Okay.
So don't mix your personal credit card or bank information with your business credit card information. Right? Once you have an LLC, you have to have your own business credit card. You have your bank account, right?
Okay.
To do it more serious, right? And also make sure you capture all those expenses, right? Because let's say if you go out, you're meeting clients, right, for the meal entertainment, use your business credit card. Don't use your personal, right? So
Okay.
because we see those quite often. The client have used a personal credit card pay for the business expenses, right? And then at the end of the year, he forgot about it. He forgot lots of expenses. Could have been deductible, right? And also, like you guys drive a lot, use your vehicle quite often. Are
Yeah.
you tracking your mileage?
Yes, I
Yeah.
use this app. It's called what is
Miles
it?
IQ.
Yes,
Okay, that's good. Okay, so how do you haven't heard about that app yet? You install that. That's very helpful. I think $59 totally. It's the worth investing.
Yeah.
$59 gonna bring you thousands of dollar deductions. And Casey, you already have app. I would think probably you may. I say half of the customer I talk to, they miss this. Now let's say you have an S corporation. Like when you try the mileage, how do you deduct those mileage?
What do you mean? How do I deduct the mileage?
Like, are you deducting those mileage on your return?
On my return? Yes.
Yeah. What's your process? So you basically is your personal vehicle or business vehicle?
I put this on. Whenever I put gas in my car, I use my business account.
So you are using actual expense.
Everywhere I drive, it's business now. Like
Okay.
I live, sleep, eat. I don't get personal time.
Yeah.
Okay.
Maybe we should do a lesson on what personal time is. What that is.
In your situation, you are fine. You just use you are using your actual expense under your business credit card. That's totally fine.
Yes.
So I saw lots of realtors. They even if they have a business credit card, they decide to instead of claim, they use their personal vehicle. Instead of claim the actual expense, they decide to reimburse by the mileage. So there are two ways you can deduct the mileage, right? One is actual expense. You go to gas station, you pay, use your business credit card, pay for those expense. The other way is in lieu of actual expense, you just get reimbursed for the mileage, right?
Mm-hmm.
So I think it's very, very often that people give the CPA how much mileage it is, and the times, let's say 55 cents a mile, let's say get $2,000, $3,000 deduction for that year. But they forgot they need to reimburse yourself for the same amount, right? Because that's just like you are traveling for, if you're working for somebody else, you are traveling to New York and you pay the air ticket out of your personal credit card, right? How do you record those expenses? You have to get it reimbursed, right? Because you and your company, you and your S corporation are two different entities now, right? So when you have if you use your personal vehicle for those mileage, at the end of the year, you need to get reimbursed for those, let's say $3,000 of mileage, right? Mm-hmm. Lots of people did not do that. And if you think about it as a reimbursement, so what does it do to your return? One is your business now get a $3,000 deduction,
Mm-hmm.
right? You get a deduction, and at the same time, you get a $3,000 put in your pocket. Are those $3,000 taxable or not?
Mm-hmm.
They're not, right?
Right, that's a reimbursement.
Right.
You see that? So net, like you extract $3,000, put it in your personal pocket, tax free. At the same time, you get a $3,000 of deduction in your business.
Right. Okay.
Okay.
That's like basically $6,000 deduction or whatever the tax saving is right there, times the rate, right? Yeah, and then a few other tips like hiring kids. You probably heard about. It doesn't have to be hire the kids. You can hire any. To us, we call it income shifting strategies, right?
Yes.
Let's say if you guys are paying 37% highest tax rate, right? If you have your kids or have your retired mother or parents working for you, they have to do real job, right? If they are under 0% tax bracket or 12% tax bracket, right? Think about this, especially for kids, right? let's say, if your kids go to college, you have to spend, $10,000 for the college expense. If you pay your kids for the $10,000 of college tuition, what's your real cost? Your real cost for you is $10,000 plus $3,700 taxes, because $10,000 tuition is after tax. So your real cost is like $13,700, right?
Yeah.
Yeah.
Right. But if you hire your kids, I see Cassie is looking at me seriously. So now, if you give your kids the same amount, but you hire your kids doing things for you, if you manage your properties, have your kids, check out listings, respond to emails, do marketing, talking to property management companies, etc. You pay him the same $10,000, and then he turn around, use the same $10,000 to pay for his own tuition fee. What is his cost? What is your cost now?
Your cost is, wait, let me think. So if you're paying your kid, you can write that off because it's paying an employee. So zero?
No, your real cost will be $10,000 minus $3,700.
Oh, minus the 37. Okay.
Right. So your real cost is $6,300.
Which is better than 13,700. Yeah.
Yeah. So 13,700 minus 6,300. So right there, you save like I don't know, like $6,000, $7,000 tax, $7,000 deductions right there.
Mm-hmm. Yeah.
Right? If you pay 40% taxes, that's like a $2,000, but $2,800 taxes saved.
So we could do this with like my grandma or something.
Anybody, as long as they are in a lower income tax bracket. So if you see like all the rich guys, they have all their family foundations, whatever set up, their kids working for them, sit on the board, they pay the board fee.
I know my dad did this. Yeah.
Here you go. Right. So it's income shifting stage. It doesn't have to be your kids. Right. Yes. Could it be anybody relative you don't mind give them money to support them, but they pay at a lower tax bracket. Right. But the key is you want to make sure they are really doing legit work. Right. You not just give them money. They have to really, you code in the time really to do actual work.
Yes.
Right.
I wish we could pay our dogs, Casey.
I've been sitting
we don't have kids. We just have the dogs.
Kid. I'm like, he costs more than some people's kids do.
I know.
Yeah.
I do.
Right. You could be your dog. Could it be your podcast model or something?
Yeah.
Yes. Seriously, he has his own Instagram.
Yeah. So the thing is, like, you want to make sure. Lots of people read the tax. They read the tax code wrong. Lots of people think, oh, tax is sort of, IRS give us to punish us or to whatever, make us to pay taxes. And I always tell my client, IRS actually loved you. They loved you, right? Mm-hmm. Tax code to me is nothing but a bunch of juicy deductions. Yeah. They want to give to owners. Right. They want to deduct. Oh, here you go. Your dog maybe qualify your podcast guest.
Yeah, and he is on our podcast every week.
Every week, yep.
Yeah.
How do I write him off?
Yeah, so really, for us, our goal is really to help help our clients to find the right tax code, find the right deductions, credits, and incentive to make sure you pay least amount of tax legally allowed. Yeah.
Okay. So Casey could actually write off expenses for her dog if they're related to her business, technically, right?
He's in all my advertising. He's on my business cards. He's
mascot.
Yeah.
Yeah. If it is really a business related, you have to make sure it is business related, business necessity related, and yeah.
Funny.
Okay. And also have to be reasonable, of course. Reasonable.
Yes, I know. I'm like, wheels are turning.
Reasonable and necessary. So.
Okay.
Yeah, but for 100% for the kids, definitely think about those. Keep them engaged in the business. Yeah.
Yeah. He's in my lifestyle videos. He's in everything I do. So.
Yeah. And I know we really left. Another thing you can just give you a few other tips, right? Real estate professional, you guys have, kind of unfair advantage when you invest in real estate, right? You call it professionals, and then all of a sudden for real estate you have passive loss limitations. For you guys, you can bypass that. So yeah. So
Interesting.
Yeah, it's
Cool.
very interesting.
So I know you only had 30 minutes. We're coming up on that. Do you have any last hacks, tips, or tricks for real estate agents with their taxes?
I think number one thing is if they just started, I would highly recommend them. If they start to have consistent client coming in, consistent cash flow coming in, get a book ready
Okay.
to set up a book. Make sure you capture separate the business and from personal expenses and get a serious book. And also make sure monitor your quarterly estimate tax payments, right?
Okay.
That's how realtors get audited, right? Because your money does not come in consistently every month or every quarter. But I ask you, if you are self-employed, you have to submit quarterly estimate tax payment. They really every quarter, right? So if you missed it, right, and then sometimes cash coming in, and then you have expenses to pay, you forgot about it, and then you miss a certain payment, right? And all of a sudden, that's how trigger a little bit of red flag, right? You pay late or some delinquencies. That's how trigger the audit.
Right.
And also for realtors, when you start a business, you don't get your book is not the most cleanest, right? So that's another reason it could get audited. So yeah, get a clean book, spend some money on QuickBook, $29, $30, spend the money, separate those business expense, run a quarterly estimate tax spend, pay it on time. That's number one. The second is get a tax advisor. Make sure set up your entity structure right. Make sure you capture all the expenses, and make sure also consider your retirement, consider all the asset protection. That's the second part. And the third part is really don't shy of write off the deductions.
Yeah.
Something you deserve, as long as reasonable. That's the reason why the Congress give you those tax deductions and credits.
Yes. Yeah. Absolutely. Absolutely. Yes. Awesome. Well, I love these tips. Okay.
Yes,
one last question, Stephen. Do people have to live in Georgia to work with you, or can anybody work with you?
Well, no, it's a federal. It's federal. So just for disclosure, so my legal license is in New York. So for any legal matters, I can only help the clients from New York. But I'm also CPA, so I can help. Can provide a tax advice to any clients using my CPA license. Yeah.
Okay, awesome. And we do, for those of you listening and not watching, Stephen's email is Steven, STEVEN at gucpagroup.com. So I'll say that again because I kind of butchered that at first. So Steven, STEVEN at GU, like his last name, CPAgroup.com. Right?
That's correct.
Okay. Yeah. Awesome. Yeah. Well, awesome. Thank you, Stephen, for coming on and sharing with our audience. I know this is going to be super helpful for them. Yes. And to our audience, if you guys don't mind following us on social media, and also if you're listening on YouTube or Spotify podcast, Apple podcast, please don't forget to subscribe so you are updated every week when our new episodes come out. YouTube, hit that bell to subscribe. So yes, I can't wait to release this.
I can never find that piece of paper. I've been looking for it.
Yes, and y'all have to.
I can't believe you guys enjoyed it.
I'll just connect with you. It's somewhere, and I'll find it as soon as we finish this. So
yes, I'll send you Stephen's contact information, or I guess you have his email now too. But yes, thank you, Stephen. I'm so glad we got to connect. I know our audience is going to love this. So thank you so much for your time. We really appreciate it.
Thanks for having me. Great talking to you guys.
Awesome. And we'll see you guys next week. Thank you.
Yes. Have a great week, everybody.